Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab? How am I doing in Discord? All right, thank you. Marty must be slipping. Well, good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. The stream's about integrating Bookmap OrderFlow tools with auction market theory using a volume profile in the intraday developing time frame. It's based on structured trades. These are available to everyone at no cost. And the idea of Trader Lab is to help traders understand the business of trading. How does the market work? Why does it do what it does? And how at times you might get in alignment with it. One moment here. Just keeping an eye on things here. Sorry, guys. General disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Hold on again. Please remember, this is not a trade calling room. This is for educational purposes only. If I get into real time, I'll discuss it. But do not take any trades that are mentioned here. You do need to have a trade plan and have a statistical edge on any trades you take. The idea of the Trader Lab is to help you understand the business of trading, how the market works, why it does what it does, and how at times you can get in alignment with it with structured trades. The process is based on this hierarchy. If you're not familiar with volume profile, I have many webinars I've done on them. It's in the library in the Trader Lab, and there's no cost for Trader Lab. There's a link in the bottom of YouTube. You can find out all about this. Watch the primer webinar. It's got about 34,000 views. You might get something from it. It's about an hour long. It talks about anchored inputs. Anchored inputs are consistent inputs. They're not random or variable like most of us use or have used, and that is indicator-based, multiple indicators, multiple time frames creates randomness. You will have winning trades with those, but chances are, in spite of the winning trades, you're going to be a losing trader. Is that you? Well, the reason, if that is you, is because we all have random winning trades, but if you don't have a statistical edge, then there's a problem. And that problem is going to be that if you don't have an edge, then you're sitting on the gambler's side of the table. Think of this like a casino. And when you think of casinos, think about how they play their games. They're structured, they have an edge, and they play them exactly the same way, even though they pay the gamblers. When we pay the gamblers in the form of stops, since we're attached and it's a right or wrong thing, not a business and not a overhead and cost of production event, we behave differently than the professionals or the business model of gaming. When we step into an emotional state, we are defeating ourselves. So we have to know that when we have a process that it has an edge, and we have to be patient and wait to extract the edge because the environment's 100% random 100% of the time, and we must manage our emotional state, which is going to respond. So we change our behavior. We get FOMO. We skip the next trades. The casinos don't skip the next hand no matter how many times they pay the gamblers because they know the facts, and the facts are not how they feel. They accept they have overhead and cost of production. The facts are if they have a statistical edge, they must play the next hand to have the opportunity to extract that edge. I hope that makes sense. Now, this is what I call a microcomposite profile. Now, there's a lot of discussion in profile world, if you will, and this is the volume profile, about what is the right way to do this. Will not opine an opinion. I only do what's right for me, but in the Trader Lab, it's what you determine is right for you. What I have found is I think of trading as a vertical integration of behavior, and you guys think of it as time frames. Well, time doesn't really regulate this. For me, what regulates it is swings. So where was an extreme on one side? Where was an extreme on the other side, which I guess got cut off down here. This is yesterday's RTH, and we gapped up here. So what that sets up is buy stops getting taken out here and buy stops taken out here. And we have longs in here and a gap. So the possibility is if we open up in here and get stops out, if we don't get buying above, then the possibility is to come down. Now, how far down we come, part of the thrill, no clue. I mean, it's always possible to fill the gap, and there's no way to know it's going to do that. So for me, and I'm very much process oriented, and when I discuss process, I want you guys to know I'm talking about a process for developing traders. As you get more developed, what we use for potentially counter trend entries are exits when you trade with the trend. Now, that may sound a little strange to you, but really, when you're developing, you need to develop the confidence and the discipline to execute with the dominant side. Now, we also know the dominant side will change at some point. But what I have found in training many traders over many years, and I've been doing this 47 years, is that if you can't trade the dominant side, you'll just blow yourself up trying to pick the highs. So when we have structured trades, and we were having a conversation about this in Trader Lab this morning, so I want to mention this. If you trade counter trend, that's fine, but you won't learn to trade counter trend unless you know where to exit. So we start out trading from a dominant side because that's where our edge is. And then when we get a structured counter trend trade, it's an exit. It's not a short. Once you have the ability to have a disciplined response for managing your trades, then you can add another dimension to it, which is counter trend trades. I hope that makes sense. I've always discussed it the same exact way in Trader Lab, and I'm sticking to it. And each trader is responsible for their outcome. If you rush ahead without the first piece, meet FOMO. If you have an edge on the driving side or the dominant side and you take counter trend trades, that's fine. But everything must be vetted. So when you're learning and you're trying to become consistent and profitable, stay with the dominant side. Once it changes, then we have other trades, but we don't pick the top high of the day. Unless, of course, you already have an edge. So for this stream, I'm consistent. And my goal in opening and doing the Trader Lab is to help traders stay in the business and create sustainability, not to create gambling. So it's always risk. So we want to take what we call intelligent risk. So this is our gap. This is our RTH open. Let me give you some things to consider. ETH high. There's stops above 75. And there's stops at 95. Okay. We have a target around 85, which is a high volume node. ETH high probability. And we have a MCHVN, which is just a high volume node, around 58, not a big deal. Overnight mid, high probability. In fact, let me give you some statistics. And there's a bunch of stuff here going on. So we're opening higher outside of range. There's an 81% probability to get there. To get to the overnight mid is 68% probability to get there. To get to the previous high or low, In other words, fill the gap. You got to find it. A 67% probability. Getting to the previous high, filling the gap about 67%. There's more. Let's see. That's enough. Now, there is a little bit more. This is the current low, ETH low. Value area high is a viable target, and so is this naked volume point of control. Value area high is 72.5. It's about a 54% probability, but we're in a liquidating market. I've been bearish overall. The gap was, it's the NVIDIA thing. That's almost like a gift. What we don't know, of course, is how far up we're going to go. That's the thrill. So randomness. Now I'm going to show you opening trades. Now we're opening in a gap. So what do you do with this? Well, if there's longs in here in the gap, then we're going to get possibly something called responsive selling. That's profit taking. We have a high probability of taking out the ETH high, and we have stops right above it. This is a high probability target. We have another level up in here that we need to be conscious of, and then stops up above here, which we didn't get. So this is an area. So I was looking for it to come here and potentially go there. So I had 11 as a possible target, and all I know is maybe. So I don't know. But I do have a pretty confident idea about the ETH high. Since there's a 97% probability we take out one or the other and we're near it, we go there. We also have a 98% probability to take out first hour's high or low. And it's a 30% probability to take out both the ETH, the overnight high and low. So we'll see. So that's what I know coming in. Here's the other part. In our context sheet, we are opening, and this is all in TraderLab. Let me find the right one. Hold on. Okay. I lost it here. Okay. So we're opening out of range, out of balance, in a gap. So is the market responsive? That question is, are we responsive in a short-term rotation and then we drive up? Or is it just gaps, sell, and does the Acapulco cliff dive? That's the question. So if it is not responsive, that means it's impulsive and we trade in the direction of the imbalance. Then the question becomes, are we continuing to drive up? Then it's a gap and go. So what's the possibility? Well, possible trend day, trade in the direction, that it went open. But here's the other thing. Suppose we turn responsive. Then it's two-sided trading at new levels. The market's accepted. And we do then, it's accepted the new interpretation of value, but we can do mean reversion then, baiting extremes. So we have to see what happens here. So let's start out with the longs first. By the way, if you have questions, post them. I'll do my best. I'm having a little technical thing going on here, so I'm going to try to just keep an eye on stuff. So RTH open, here it is. So now I'm going to show you the longs, which I took, and I take other trades I don't discuss in here, which is not that relevant. I've just been doing this a while, so I've taken these ideas and I've, let's just say, refined them a little bit. But the object of TraderLab is to help traders become consistent and learn the business, and also have a methodology that is structured. Even the learning methodology is structured in a sequential process. And it's very important that traders develop a plan and follow it. Their plan, not somebody else's plan. I want to stress that because if you become a whirling dervish, you're on your way out of business, and that's not the objective. RTH open. We see a sweep right here. Now, the possibilities are when we get this, we're going to move up. Liquidity is here. High volume is here. Resistance is here in the ETH. Support is down here. And this is not that material, except this is an outside edge. This is a retail price. This is an outside edge. This is high volume. It's a retail price. And then up the financial food chain. So let's watch. Outside edges out here, remember. So we open. We get our buyers. Now, the possibility is, what's the possibility? Responders. So I have to be very patient and careful on the open. And I always say to developing traders, this is not where you trade. Too fast, too furious. And if you don't have unconscious competence, you can't respond to it. But you can learn to narrate the business, if you will, or the market, I mean. And that is, what is the auction? The auction starts right here. This is shopping. This is the retail price, highest volume. It's right there. Now, this thing starts at 0, so it's very sensitive and it can be very misleading. But I try to use it, and I kind of figured this out many years ago because it was like phenomena. What is this? So what is this? This is the retail price. If this shifts up here, that might be meaning this is too low. Boy, we're really selling off here. Really nice for the shorts. Those of you who are short, enjoy it. We had a number of structured trades on the shorts. I'll show you guys that later. Right now, we got to deal with the longs. Buyers are here. Support. Sellers are here. Sellers are here. Micro structure. I'm going to show you. I'm going to go down. I always do this because it's so fast here. I can show you a lot of examples. So that's my objective, to show you how to read the auction. Now, reading the auction doesn't mean you sell this, you buy this. It's a way to narrate and navigate. I'm in here 10 seconds. I already know I have support here and I have resistance here. And I also know this is my opening swing low, so I know that's going to be vulnerable. So let's remember these pieces. Now let's move on. Let's just see what it does. Resistance, support, opening swing. See it? So I already know not to sell it because of the gap, but right here, this is support. You can see it there. I want you to see pieces. This is resistance. How do I know it's resistance? Well, I don't know what will happen. So let's get over that. But here's what I know. Buyers are here. Why didn't it go up? You see the delta because there's a passive seller. And the passive seller is that, the iceberg, okay? And no way to know. You know, it's like Pac-Man. Do we eat up the sellers, or do the sellers cap the buyers and absorb? They absorb, I break low. Now the buyers were here and we're under them. What is that now? Lewis, it's resistance. I don't know. And my support is here, okay? And my opening swing low, if I get breakout buyers, which of course is part of it, there's going to be stops here. So too high, too low, break low. Watch now, break low. Absorption. Now let's watch. Now, here's what I know. I don't know a lot, but I know a few things. Order flow trigger. Let me show you. This is advanced. Now, some of this I show is advanced, and some of it's, They're pieces. And when I do this stream, when you're starting out in Trader Lab, this is not important. The more structured pieces are important. Then you start adding things. So when this happens here, so this is my support. You see the absorption. There it is. Break high. This is support right here. Support, support, break low. Now this is resistance. You see the behavior. Follow closely. This is minutia, and this is also a way to navigate. So if I don't get above here, I got more, more downside rotation. If I break above this and hold it from this side, I can then come here. Let's see. And I have resistance there. Let's not forget, I'm going to throw another little line. I hope this isn't too disturbing to you because it's such minutia.
Sweet ES fires at 6,689 points.
Okay. This here. Now, this is really advanced. Looking at this, I can see where you guys would have a problem with this. Let's look here. This buyers are here. Of course, the buyers are here. When we break high, this is a trigger. Now, you could get in here if you recognize it, or in here, is the high volume in here. You break here, it's a long. You break high, it's a long. And more advanced, guys. What's this over here? Retail. What's this? I'm in multiple time frames, guys. So probably confusing you because I'm using levels. Hold on. So let's look at some of these what it means. Let's come back to language, okay? So let's come back to language. So this is too high up there.
Yes.
That's where the sellers were, and I broke low. That's resistance. Gonna move it out, just so we have it in here. Resistance, break, support, break low, resistance, absorption, clueless, break high. If this is this can be a trigger. It's very advanced. When you break here, you could be buying this and you gotta be under here. That's one way to do it. Here's another way to do it. Right here is another trigger. Remember, what is this? Responders. What were we anticipating? Profit taking. I mean, are we doing the Acapulco cliff dive? No, we're looking for long. What is this? Let's look. This is a trigger. Coming above this volume is a trigger. Coming back to the volume is a trigger. VPOC migration is a potential trigger. Support is here. Support is here. And then you go down. Okay, let's look. Support is there. So you have this is support. Now let's look at this.
Attention. An alert target has been reached.
Lovely. Really rolling along here on the short. I'm no longer short, guys. I'm, as they say, long gone. But I'll talk about them. So now, here we have resting liquidity, and we have support at our variable high volume node. This sweep suggests a downside rotation. Up here, we have a sell structure. Let me show it to you. Now, you have it here. Look here. resistance, break low, break high. This is potential support right there. Absorption, there it is. Break high. So I got resistance here. Potential support is right here. Break low, potential resistance. Now look where I come back. Resistance, high volume node. So a couple things you could do with this. And we've got stops at the time sitting up here, and I don't believe we got it yet. So there's what I call fuel up here. And that means the shorts in here have the opportunity to get abused. So I'm still looking up here. So all I can do is get long at this point. Where do we come? Now this is too high. I'm going to label it a variable high volume node. So this becomes my resistance. And now the teeth chatter. I'm trying to remember, because I was posting about this in TraderLab. I think that this was an obstacle, but I can't remember. So anyway, this and this. This was too low. Wait, let me get back. It was here. So our support is there, down here. VPOC migration, retail price. Is it too low? Buyers, it's too low. Come up, this was too high. This is resistance. Okay. I need to clear this to have the opportunity to go higher. If I don't clear it, I can return. Now this, remember this one. When we come outside here, this is like a stop or an inventory grab. We did not take out the opening, this. So this is the outside edge out here. Okay, so this now, I labeled this the low, so we went up, we came down, we got our buyers, we broke above here. So this acts as a potential support area. Let me pull it out. And then under this low, because the buyers are here. You see the 1,000 iceberg here? So that was absorption. So there's a possibility if we come out here, they'll defend it. And this was where we broke high. Let's just see what the structure looks like. So this is your support. This is your resistance. Break high. We're trying to get through this because we had sellers here, exhaustion. So let's look. Stops are there. This is a target. And then what happens here? So this is where it fails. This is a long. This is a scale. We come back. No bueno. Resistance. Break high. Stops. Next target. Now, still going up. Now, I have more targets up here. I have this. And I have this for fuel, which is stops, and then I had 11. And those are all in that chart that I showed you guys. Boy, this thing's just going down, isn't it? Wow, got to get going here. So I need to clear this, come down. I'm getting a sweep. I'm above my IB. Now this one, I thought we were going to fall out the bottom. I took a short. I'm just going to tell you what I did. I got short and I was looking for the break. I got scaled. This is the sweep. This was like, what's happening here? Pulled back here. If this is too high, then I'm looking for it to come out the bottom. Didn't do it. So I got scaled and ended up with nothing out of that. This is my resistance.
Sweep ES buyers at 6,647.75.
Now the buyers came in here. So I'm coming down. This, when I was looking at this, I was kind of like betwixt and between because of this. So then I just sort of stood back. I was still looking for a short, but not so much. So now this becomes support.
Sweep ES buyers at 6,600.
So this is my area. If I get long in here, my stop's got to be further away. So this was a long for me. But I use wider stops because of the volatility, and I was using this. So this break test, this is and sweeps. You see the sweep? This suggests higher. So that was a long. So I didn't get long down here. Now this is very interesting. I got out of my long up here, and let me explain why. And this is something we had a fervent conversation about this. There's a 90% probability. I think it was here or it was up here after this. Yeah. This is your resistance. So I saw the sweep. It wasn't here. Or was it? Gee, I don't remember. Was it there? Where did we take out the IB high, guys? Was it? Doesn't look like it did it there. What time? Oh, I see. 9:30. No wonder. It was in my mind. Hold on. I got to look. It's just bothering me. I got to see when I got out. Because I thought it was there. I got it. Okay. Yeah, it was. So what I saw was the sweep here, which suggests downside rotation. And I was up at the IB. And for me, I just got out of it here. It was like 89 or something. I believe this is where it was. I don't have time to go back and look. But this is a problem right here. I have a sweep and I have the liquidity. There's my rotation. Now, for it to continue higher at this time, there's my high volume. So the buyers are here. The sellers are here. There's the liquidity and the sweep. There's my break. Now, this is resistance right here. So it has to get through there. So I come up. Gee, I don't know if this is the spot, guys, because I got out like around 89. I think I might have the wrong location. I cannot remember. We'll see. Let's just see. It was here. Okay. It wasn't that one. But this is the same area. Let's look at the, that makes more sense now. This liquidity is here. So this could be an exit or a trade management opportunity. Pull back. This, well, I'm not going to say it's a trigger. I'm just going to say it's a trade management opportunity, and you have this. So we come back up again, and we have the first hour's high, which is set at 9:30 Central Time, and it's called the IB with over 90% probability to take out first hour's high or low. So there's my resistance. It comes from there. My sellers were here, so now I come back up, and either we're going to break through it or not. And we take out the IB. Now right here, let me show you the detail, because this is where I got out of my longs. I test into it. It comes back in here. So this sets up a trade. Well, it sets up a trigger for a exit or a counter trend trade. And I always say developing traders should learn the triggers and the trades, not take the counter trend. Exit with the trend. The trend is up currently. You use it for an exit. You don't reverse. Doesn't matter. So there's the absorption. This is where I needed to get above. Break low. Resistance is here. Break low. I think I got out right here. I don't want to scroll back and look since the market's done the Acapulco cliff dive and my resistance is still here. So I either would have got out here or I think it was right here, really. Anyway, it was 89 and change. So that's luck. That's not any specific skill. So that's my exit. And I'm also prepared to get long again after a counter rotation. So for me, the context is up. I only take longs. Now, what happens here? Instead of a hazy, lazy rotation, I break below the mid. And right here, I'm looking at it. I've got liquidity here. I have a sweep at the mid in the VWAP. So I'm looking here to see if I get a continuation long. Let's look at it. So I see the sellers. I have sellers here. My buyers are there, and I'm below them. So I have no trigger here. My sellers are here, and I have my sellers here. Okay, so this is resistance. This is resistance, the high volume. And now I break. So now I'm looking for it. I'm looking for a buy trigger. But I'm not seeing, it's like, where is it? I'm not seeing it. Now I'm suspecting it, but I'm not seeing it. There's my liquidity. Now I get my sellers are here. My sellers were there. I have to get above this. And boom, comes right down again. So now I'm going, this is, I'm waiting. I'm still thinking, well, okay. Now I'm here. So I'm going, what's going on? I'm getting my sellers below the mid, below the VWAP, and my micro volume is in here. So nothing, I'm just watching it. Now it breaks low. Now I want to get short, okay? So what do we have here? VPOC. If this is too high, and I break low, and I have this where all the stops are. Remember, we came down once before, we missed it, and we got another leg up. What that means, there's more stops, and it's more vulnerable. So for me, this sets up a short. Scaling here. The overnight VPOC is my next target. I narrated this in the lab. Now let me show you a couple other little things here. Too high, break. Here's your volume. I'm going to start showing you something a little advanced. Hope you don't mind. I can't even get to real time because so much has happened here. This thing has left, Elvis has left not only the building, but I think the state. This is resistance. High volume is here. This is what I call microstructure. So once I'm under here, then it's see you later. Thanks for playing. You get a coupon to the buffet. Resistance. Okay. Now, so why? Chop, 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 chop. Sellers are here. Buyers are here. Liquidity is there. Break low into liquidity. Then what? Back to high volume. And I'm under the IB. It's an aggressive trade. It could just as well squeeze and I take a stop. Every day I put a trade on, I can take a stop. It's just the way it is. Next target. Now, I have another trade I put on here. Let me show it to you. This is a order flow trigger in alignment with an auction location. This is the trigger. This is the location. Let me give you the rationale. If this is the high volume price from the ETH, in other words, the fair price, and we're leaving everything that is above us, if I have this and I break below it, order flow trigger, location, you can sell. I sold it. So I sold this. Just saying, not saying it's a good idea. I just did it. And my stop was here, just so you know where I put it. And why would I put my stop there? Let me show you. Support is here, order flow. So right here, it's maybe support. Don't know. Do you? So we don't know. So, but what else do I know about this? High volume is there. Support is here. I'm going to show you something. Again, it's a bit advanced. So support, break high. What's this? Let's look. I'm not paying that. The store, too high. So what you can do is you can sell this on the retracement. You got to scale here. That's one. And then you're going here. I took that trade. Now we break low. I have another order flow trigger. By the way, order flow trigger, break, order flow trigger, break, order flow trigger, break. I hope you're seeing something interesting.
Yes. Sell. Size 200.0.
Follow the yellow brick road. What's this? High volume. What does it say? I'm not paying that. What happens if we come back? We can maybe lean on it, right? Where's the high volume? It's right there. Where's the outside edges of this? You see where the node is right there? Okay. So, subject to your plan. And this is not anything more than structure. I'm only showing you behavior. That's resistance. Stop could go there. Outside edge. This is an auction. This is auction market theory. Shopping. I'm not paying that. Yeah, but it's on sale. Retail. Leave the store. I'm out of here. Where's my resistance? Here. I can sell this. I can sell that. And then I can put my helmet on and hope for the best. Don't you think? What's this? High volume. By the way, this is a sweep. The sweep suggests the counter rotation. It's another great tool in Bookmap. So if I see the sweep, I already anticipate this. And I got it there too. So it's, where are we going? Doesn't have to do anything. But I can anticipate. And I always say in Trader Lab, you got to anticipate to participate. I don't think I'll ever get caught up here. Talk about an outside day. Not so good for the longs. What do you guys think? Sweep, rotation. Where's resistance? Hold on. Boy, I can never get caught up with this thing. This is resistance. This is your last potential short. This sweep suggests downside. This sweep suggests upside. Boy, they're in a hurry. Resistance. See it? It's the saying goes, I can't make this up. Whoa. Where are we? I don't think I can keep doing this here because I can't show you all these trades. I think I'm just going to look at your questions. This is a target. This is yesterday's retail price. Yesterday's low. Everybody's under the asphalt at this point. I left a lot on the table by not trading while I stream. How we doing in YouTube, guys? Hope you're getting something out of this. I really don't have that much for you now. The train has left the station, as they say. So for me, it's trade management. And if I don't have a trade after I use all my bullets, I just wait for retracements to structure, or I don't trade anymore. That's just what I do. And this thing is still going down. If we get under 94, it could open the door.
Sweet PS sellers at 6,614.75. Sweet PS sellers at 6,613.75. Yes, sell. Size 200.0.
So we have an outside day. Pretty significant. In the meantime, you guys have any questions? Because I don't think I'm going to have, at the moment, I don't have anything here other than wear a helmet. Is it FOMO in my voice? No. What it is these are the days that make your month or even your year. And when I don't trade, once I kind of get into this stream, I can't trade because I don't it just makes no sense. It'd be like being on a phone, talking to somebody, and then out of the corner of your eye, trade. These are big days, so I can't recapture a day like this. So I guess I'm not mentioning FOMO. I'm mentioning conflict between my business, which is trading, and this. So not to be whining, guys. Apologies. It's just there are a lot of opportunities here. This is a short right here. Really not paying attention. Let's go look at this. Now, these are continuations, and they're on the run, This is really advanced. You break low, you have your resistance here. Break low, and this is, see this here? Break low, break low. Let's look at the structure. I might as well show you this stuff while we're looking at this. This is the outside edge. Actually, it's pretty close. And the high volume is there. So this is like your volume point of control. Break low, revert. This is where your stop would go. This is a short. And you can just keep working these if you vet them. And you're going to take stops doing this. So we got to get over that, okay? But this is more advanced. This is another target sitting down here. If this is another area, outside edge to observe, we chest in the range, then this would be an area to observe. I don't call trades. I take stops. You take stops. You don't need to take mine. I don't recommend it anyway. Pablo, you didn't take any trades today?
Sweet ES sellers at 6,609.5. Sweet ES buyers at 6,610.75.
Well, gut bolt today is different, but this is why we learn to trade, so we can stay focused and just show up. That's really what we're trying to do here. It's just show up. I'm going to put some levels here on the chart. 1 second, guys. I'm trying to make adjustments. Okay. Let's see if this works. Sort of. Okay. Well, needless to say, shorts make a lot of sense. Huh? Now, the thing you got to be conscious of here is we are going to get counter rotations. That's someday. Wow. I'm just trying to scroll down my profile here. I can't find the bottom. What a range. So let's watch this now. So let's get back and concentrate on where the locations might be. So I look at these high volume areas. I'm also going to be looking out in here. If it comes out here, depending where it comes, this would set up what's called mean reversion, which is a short back to here. We didn't get there. So this is the next target.
Size 474.0. Sweep EF sellers at 6603. Yes. Sell. Size 430.0. Trade EST 5CME at PM light sell 421.
Where did this come from?
Sellers at 6,605.75.
Resistance. Gotta make sure I've got where this came from. Break high, resistance, support, resistance, break low, resistance, resistance, break low. So let's just keep an eye on this and see what it does. Getting sweeps. This is what you call a big failure, guys. So, and what's interesting about the way the market works, it goes down to go up, it goes up to go down. And of course, you don't know what it's going to do. Okay, let's watch what's going on here. Let's see the structure. These are not trade recommendations. Market could push. Remember, there's buy stops above the swings. So when you're thinking about this, you got to be thinking outside edges and where the volume is above you. And then, you know, it can do anything. So let's see if we can. There's our outside edge. It's very fast. If you don't have the ability to operate, it's very fast. Outside edge is up here. And this might be all of it right here. You don't know. Outside edge is like here. Let's just watch it, okay? And remember, market could do anything. It could care less about a level. Outside edge is up in here. So let's watch. Microstructure is there and outside is here. Microstructure is here. Not trade recommendations, guys. Just be patient and hang out. Volume is there. Micro volume is there. Outside edge is up here. If you're playing in this, which you shouldn't, you got to be away from this. Let's watch it. Just see what it does. One thing you need to be, if you ever get down to this level, in the sense of time frame as you think about it, you got to be very quick and know what you will do. It's not what should I do now. It's what you already know you will do. Watch the deck here, the stacking, the algo coming in at the location. Let's see what it does. It's very choppy, which you would expect, right? So you have to know where you might participate. You must get risk neutral. You also need to know there's going to be stops out here, and you have to be further away with your risk. If that doesn't fit, you don't have a trade. But these are trades I would entertain. That doesn't mean buy them a cocktail. It just means these are my trades. These are advanced also. Hope you're getting something out of this. And this is not a recommendation. Do not take these trades. I take stops all over the place. When should you have, Athenians, when should you have switched to shorts? Well, the IB, the break of the IB, I mean, there was other spots, but if you're just waiting, the fact that the longs failed sets up shorts, and you can take them. You can take them sooner. The thing is, you need to be able to define change. That's context. The context is the driver of all of this. What's the condition of the market? Well, currently the market was long, and where's the wear and tear on it? You know, where do the longs get stuck under the IB? Now the IBF up on top was an exit, unless that's not your plan, you know. So if you took this short, you'd be risk neutral. That's the objective. And we still, did we get here? No. We still have a target down here and stops. So we'll see what it does. And remember, rotations are random. I have no idea. I don't think about it. Risk neutral, if we squeeze these guys out, we're still looking out here. And again, not a recommendation. Sweeps. We can grab the inventory up here, and then we have to see. Remember where we are, outside edge. This is what's called mean reversion. This is the high volume. The nature of this is to come back to there. Okay, let's watch now. Stops above here, outside edge. This is the area, right? So if you were taking these, which are fine, you got to scale. Your stop had to be where? Not here, out here, right? This is a reversion trade. And again, it was reversion from here to here, there, and it's the same thing, there, possibly to there. So, and then either take a stop and, they give you a ticket to the buffet or not. Very volatile, and you have to know what you're doing in this, and you have to get risk neutral. There's shorts in the market now, they can get squeezed too. Everybody takes their turn of getting abused. The market goes down to go up, the market goes up to go down. The market goes down to go up, the market goes up to go down. Market goes down to go up, market goes up to go down. Market goes down to go up, market goes up to go somewhere that we don't know. This is my outside edge. This is my backstop. I need to be away from this noise. So, and you're going to see me take stops. I always take stops. So don't even think about it. I'm not calling trades. I'm trying to help you understand how the market works, and it's always random. Remember how the casinos operate. What I do is I'm reading the auction and what this might mean. This might mean that everything above us, all of this, is too high, and now we're doing this thing. So if this is my outside edge, and I'm testing yesterday's range, kind of important, if I can stay under this primarily, then I can potentially continue. And I have a target here. So I'm trading to a target that was previously too low. What is the nature of the market? It's a shopping experience. The potential is to come here. Now, does it go up before it gets there, or does it ever get there? No clue. So not my job. So what's my job? My job is to put a trade on, attempt to get risk neutral. I know I got my buyers here, and I got my buyers here. If I can get under this, then down here. Now I have this liquidity coming in to skew the book. That can put pressure. See when it comes in, see the change in the behavior. See what it does? These are things you need to become aware of. When that shows up, Just look what happens when it shows up. See the behavior? This is order flow. Now, it doesn't tell me to get long. It tells me the potential for a reaction. Now, if I come up here, and I've always wondered about this because I don't know there's a definitive answer. I'm still in this area, and I know I can get squeezed, so I'm got to be outside. Okay, so I've always wondered, what's this doing here? If it's skewing the book up, why? Is it possible? I don't have the answer, by the way, that they are skewing the book so they could sell. So you get short covering buyers, there's the stops, and they use the skew to get short. What do you think of that idea? Is this making some sense? Can you see the behavior? Now look what happened here. This comes in here. What is this doing? And now we got to see what happens with this. Do they pull? Notice what's going on here. 99 here, 100 here. Is it possible it's the same? Same guy? So this can, bop between these. Now, what would be preferable, if I could call somebody and ask them to turn something off, would be to pull this and move this down. Let's see what it does. And it's not a recommendation. What we're trying to do, and these are algos, okay, they're just bracketing algo. This is meaningful, and that is meaningful. So can this move down, and this move down, and this pull, or does this just disappear? Anything can happen, but let's watch and it is not a priority of input for me. And there's some more, and look here. Let's watch it. This came in. More pressure. These don't have to be the same, This could be one, on one side of it, and this could be the one who's pressing from above. Let's watch this. Where is our last potential short? Here. Right? And where are we trying to go with this thing? Maybe. There. That's a trade. Not saying it's a good one, just saying it's a trade. That's Trader Lab. How we doing in YouTube, guys? Hope you're getting something out of this. This is like a freight train. Basically, this is trading the auction using structured trades. We're in a continuation trade mode. I don't have any longs. It's not on my list at the moment. What I'm doing now is continuation trades that I'm sharing ideas. These are not trade recommendations and trade management. There's some more. So these, now you got some algo here. Let's see if this guy pulls or trades. We got a sweep here. Let's see if they just trade through this. This is important behavior here. Let's watch it. Now, a few things you can do with this. Now, I have a target here, which doesn't mean anything. And you're going to say, well, see, they pulled. Now, let's watch. Now, if we have to watch the behavior over here. They pulled. These guys are still up here. Let's see if they can push some more. This was support. And if we can get below it, that's the next target. And maybe under here. So let's just keep going. 94. This was a target previously, if you guys remember, on the shorts. So now What's under here? The stops for the longs. This now is, here, watch. You see what this is up here where the short was? By the way, this is a, I'm going to call it a little bit advanced, but this is mean reversion. What I suggest to developing traders is to understand market mechanics. This is reversion trading. It is outside in, and then if the trend, there's no longs here, at least not for me. If, you know, as Dirty Harry used to say, do you feel lucky? So no longs. So we're going to watch this in case we come back, which perhaps not so much at the moment. Another low volume area is going to set up over here. Our target was there and now under the stops. So the same. How we doing in YouTube? Please give a like if you're getting something out of this. Let's watch this behavior here. If we come up, it's a low volume area. It's the same as this. They are not all created equally. This separates key distribution. That's why this is not mechanical. This is an order flow phenomena at an outside edge. We got to watch now. Let's just see what it does. You know? I hope you don't think I know what it's going to do, because I have no idea.
Yes. So, size 540.
This is resistance, outside edge, order flow phenomena. Let's watch. It looks like we might get some more gas here. And this is an area. It's not a wall. Let's watch. It's only an area. Let's see what it does. Let's see if the auction is speaking to us. Microstructure is here. So you got this, and out there, you know. So that's what you got here. Let's watch it. These are not trade recommendations. I'm clueless. Absolutely. I can prove it. If I had a clue, I wouldn't take any stops. And clueless doesn't mean ignorant. It means the outcome of any trade is always random in a distribution. If you have an edge, over time the edge will show up. What happens here? Clueless, right? So let's watch. Not a wreck. High volume. We have high volume there and here. Outside edge. If we keep going, then we got to deal with this one. So
We have sell IC 500.
sellers to control here. Resistance is there. As we're pushing up, we just have to watch these levels. There's been no trigger yet.
Sellers at 6,612.5.
You can see what this is like. You're trying to read the micro. No, not yet. Resistance is here. This suggests potentially higher, the sweep. So we have to wait. Nothing to do. Our outside edge is back here. So we just have to watch. So we can look at these levels, and right now there's nothing happening. You can just see it's pushing. This suggests higher. If we can see a buy sweep, so now we're going to watch this. this. Let's just see what it does. No clue. Outside edge from the other side. Microstructure is right there. You've got a low volume node. You see, they work from both sides. So you have this one up here, which was our short. And now you have this one. In other words, this to this is the other outside edge here. Stops are sitting here. So, and we have our iceberg selling. High volume node. So we just sit. It's all you do with this. You sit, you read it, and then you're looking. You have to always look left to see where the buyers were here, the sellers took control. So you got resistance sitting up here, you see, at the high volume. So yeah, this is very tricky. Where's the outside, right? Nothing simple, except you can understand where behavior might take place. That's all you can do with this. And then you need to have triggers that you understand. Like this is a trigger, right? And well, what about this one? Well, you come back here, you could sell it here. Of course, you could sell it there. You got liquidity that came in here. And this is, you could sell it there or there. And then you've got to be looking back here, outside edge. And this might not be your trade. I'm just trying to share how you can read it. And, and for me, if I take something like this, my stop is not here. I can't do it. Mentally, I cannot do it because I know I can push. So I'm always going to look further away to hide my stop behind some volume. I mean, this, and I'm just giving you examples. Now, this is the next area to observe. Let's see what it does here. If I can break below this, then I can be looking at this as resistance. It's my low volume node. Not a recommendation. We're just following the yellow brick road. So we want to see this. Outside edge, low volume node. See what it does. It's coming from here. How are you guys doing? You all right? Okay, we got to watch for rotation now. We are in a liquidating market. We're going to watch this area. This is the last potential short. Not saying this is your trade. It doesn't have to be and it shouldn't be unless you're already doing the other structured trades I've shared. You need to become profitable before you start becoming a whirling dervish. LVN didn't get there. Pretty aggressive selling, guys. So the last potential short is out here, right? Yeah. This important right here. This important. If we can go lower, we got this. Not a recommendation. No idea. Not my job. I'd say this is a little bit of a reversal. What do you guys think? CFJ, when I see sweeps going both ways like this, I'm going with the trend. So the fact there's sell sweeps here, I can also use a sell sweep because what I anticipate is this. And if I get the sweep and it does the opposite, that's still material for me. So I'm focused really on the buy sweeps for as part as supporting a trigger. But it's not before buy sweeps were available, or even this, I was trading the same behaviors based on the profile. So before there was all of this stuff and we had the technology, we had the profile. So everything I do kind of comes off of this profile. By the way, one thing I didn't notice while I was looking at this, yesterday's low. So we would test yesterday's range. It's very logical, by the way. I just didn't see it. So you broke out of yesterday's range, and then you came back towards it, and it's too high. That suggests lower. Okay, I missed that. That's why I don't trade while I'm streaming, because I'm going to miss things. When I'm trading, I don't miss this stuff because I'm 100% focused. That's why I can't trade. Been there, done that. Not so much. How are we doing in YouTube? You guys conscious? Popo, the way I use the dots in the volume bars, this is delta. So this is just telling me aggressors. And then the thing is, and the bubbles are the same. What it is if I get an aggressor here, why did the market not go up? Because there's a passive seller. So you have market orders or buy stops, and then you have passive participants who have to be on the other side. So when I get a green, something green like this, and it goes down, that shows me there's this iceberg. And that that says to me is south. Maybe. You know, I'm always going to say maybe because I don't know. What's our microstructure here, by the way? And where's our volume? Look at the little HVN. This is resistance. Sellers are here, buyers are here, break, trigger, retrace, trigger, get risk neutral, get your oxygen tank and hang out. Not recommendations, it's structure. Depending on your skill, at some point, what'll happen with you, and you got to do this for a while. This is not 3 months and now off you go. It's really, really about learning a foreign language and being able to interpret it and translate it in real time. If you want, think about learning a musical instrument to be, actually have some skill at it so you can actually play it and perform, or speak a language in a conversant style with comprehension. How long does it take? That's what it takes to learn those. So let's watch our behavior up here. Outside edge now is here. This is where our sellers dropped it. So we're going to watch outside edge, and it can do anything. Remember, this is not predictive. It's just maybe. Maybe it'll do this, and then where? Sellers at 6,594.75. Does that make sense? 20 and 1875. I'm not sure what you mean. Let's watch. Outside edge. It can squeeze. It could do anything. Not our job. Let's just watch.
Sweep ES sellers at 6,600 for 0.5.
Outside edge. We can stay under here. Then we can rotate. And the volume is sitting right in here. If not, we just squeeze up. It's just one or the other. It's nothing more than that. So it's about looking at the structure. So when you fall out of one, then and you start another one, if you come back through here, then you can come back up here and even out here because there's stops. This liquidity is coming in again. Let's watch it. And our outside edge, well, we have this, but we also have this again. So let's watch. Buyers were there, sellers were here. So what you can do with this is you can go, well, I had sellers here, so that's resistance. We broke away. I had buyers here, which gave us that. Resistance now is here because we broke below the buyers. There's your chop, there's your resistance, and down we went. So resistance is here and there. So if I take a short, I'm going to be above the next level. And if that's too much risk, then it doesn't qualify, or you have to drop down size. And all I'm doing is I'm trading this stuff, because it's a language. And what this is right here is that's a store. Too high, too low, retail. If this price is too high, I'm going to leave it. If this price is too low, then I can go up here, I can go here, I can go here, I can go anywhere, right? So I can anticipate behavior. I can't predict it. So I can look at these levels. Now, let's say I took a short here. This is my support. It's right there. That's not a good place, don't you think? Now, if I took it, I get out and I put the trade back on again. That's just one way to do it. Not saying it's, you have to vet this idea. And the other part about this is we're in a directional market. So it's a trending market, right? It's these trades that I'm discussing are not qualified in other market conditions. This is one of the things that's really important to understand. In TraderLab, there isn't a one size fits all. It's about this, the context. Trend down. What do? Sell counter rotations until it breaks. Well, has it? No. So then I'm using OrderFlow to help and structure. One second here. I got to get back to the hit parade, right? So you could be shorting this, but you have to know where your protection is. It's out here. So if you sell this, you got this. If you sell this, which I wouldn't do because of that, here's why. Because the volume is here and my buyers took over. So if I'm taking a short, I've got to be thinking about this and scale. Okay? That's how it works for me because I'm trading store to store. Store to store. Where did I find my buyers? There. Where's my sellers? Here. Well, there they are, and my sellers are there. So depending what level I come up to, if I sell this, I got to scale here. And then it's, we all sit here and we wonder because we don't know. Let's watch the behavior. So if I get short, I'm risk neutral. I got to clear this to go lower. But I've gotten my fuel out. So there might not be anything more in this. I don't know. Not my job. Does that make sense? Popo, I do think we're in a bear market now, but I have no idea. Actually, I thought we were in a bear market past bunch of days. Um, what I have observed many times is the market will do a violent gap, and I don't know the outcome, like anything, in one direction. And if we fail, all it was getting the shorts out to go lower. It's similar to what has happened. It happens all the time, but this is massive. So massive gap, massive failure. And we can do the same thing in different time frames, but it's less dramatic than this. So we got to see now what happens here. Okay, what happens here? This. We have to, now we're getting a sweep and we're coming up. This might be done. I have no clue. It's not my job. And I'm getting sweeps. And the sweeps often suggest when they're at an outside edge of a rotation that we're going to continue lower or at least rotate. Don't know about lower. The buyers took over here. So this is and there's the volume. So this is support right here. Now the trend is down. So, you feel lucky, as Dirty Harry used to say. Do you want to get long, or are you just taking continuation shorts until the structure fails? So this suggests lower. This is where the support is. So, can you operate in this? I can. Can you? And I'm leaning against this because the sellers took control here. The buyers were there. See where we come back? Right to where the sellers dropped it. Now I have the sweep. If I sell this, then I got to be further. I got to be out here. I can't be here until I get below, some structure, if that's my job, or my plan. So, and where's my support? Wasn't it right there? You see? Right there. Right here. There. So I got support here. And I got my resistance up here, right there. So there's your resistance. Here's your support. So I can look at this and I can say, well, the buyers took control here. So I got to scale ahead of the buyers where they took control, which is there. And if my sellers are over here, then I can be looking to see the behavior when I come back to where my sellers took control. Does this make sense? Hope so. It's a trader lab and you can learn this. I'm not saying, and you can't do this without understanding how the market works. And it can, remember, we all take stops. So there's no holy grail. All there is understanding market mechanics. Notice the skew and notice the behavior. Let's look at this because you're seeing this, right? I got this and I got this. See how the market behavior changed right there? And we get the skew up. Anyway, I'm out of time, guys. There's a lot of information available if you're inclined. There's no cost for you to visit the Trader Lab community. There's a link in the bottom of YouTube if you are interested. There is no cost, and it's a serious community. It's about the business of trading and creating sustainability. Hope that's something that makes sense. Let's go take a quick look at the market. There's the sweep. This guy needs to pull. This needs to come down. And that's where I have to leave it. Thanks again, guys. Thanks for visiting the Trader Lab. Interesting day today. Go back and review it. Your trend continuation trades are really what you ought to be looking at if you're in Trader Lab. And this is a trend, so it's a specific context, and then it's specific trades that are qualified. using the things I've shared in Trader Lab. Take care, everybody. Thanks again. Hope you got something from today. And if you're in YouTube, don't forget to leave a like. Thanks.